Hi everyone, welcome back to the audit and attestation class chapter 4. Yes, we are continuing in it. So this is part 2. Please look at part 1 of journal procedure, obtain sufficient appropriate evidence, and there is part 3 also which is coming just after this. So in this part 2 we'll be covering three things. One is accounting and review services, second is attestation engagement, and third one we'll do some practice question. So let's dive into.
We discuss in context of audit. Now look at accounting and review services. Accounting and review services, which you follow. What do you follow? SARS. SSARS, right? So non-issuer compilation engagement. So obtain a required level of knowledge. So in compilation, no assurance is required. Only obtain a required level of knowledge about the accounting principle and practice of the industry in which entity operates. That is only required. Gain a general understanding of the nature of the entity and business transaction or operation is required. Review engagement, you need to perform inquiry procedure, analytical procedure, and you need to take a written representation. And you provide limited assurance, right? Consider the reasonableness and consistency of the management response to inquiry. Now, the things you need to consider for the review engagement. Second is read the financial statement and consider whether there is an indicator of material non-conformity with the applicable financial reporting framework. So these two things you need to keep in mind for the review engagement of a non-issuer, right? For the issuer, required sufficient knowledge of entity business and internal control. For what? To identify the type of potential material misstatement in the interim financial information and consider the likelihood of their occurrence. Second is select the inquiry and analytical procedure to confirm with the applicable financial reporting framework. Lastly, attestation engagement. Sufficient appropriate evidence should be obtained to provide a reasonable basis for the conclusion. In attestation, what all engagement you do? Examination, agreed upon procedure, and review engagement, right? So majorly what you do in attestation, specific account balance, transaction, and disclosure testing, right? So here you need to design and perform the test of control in the following situation. First one, sorry, let me renumber this. First one is accountant intended to rely on operating effectiveness of control to determine the nature, timing, and extent of other procedure. So if you are planning to rely on control to give your opinion or to give your findings on the respective agreed upon procedure, examination procedure, or review procedure, in that case you need to test the controls. If you are planning to rely only, then the procedure other than test of control alone are not sufficient. That means if you are planning to rely on control, or if you are supposed to give your conclusion on the controls, then at that point of time only other procedure then testing of control is not sufficient. You need to do test of control if you are planning to give an opinion or if you are planning to give your findings of the control. Third is subject matter of the examination in the internal control. You need to keep in mind for the attestation engagement. Whether you have given testing the related party, then you need to look at from the related party transaction point of view. If they have given you specifically for inventory, then you need to give inventory as a consideration for drafting your, you can say, audit plan and the testing plan.
Kamal, a question है.
Yes.
Just on the point B where it says procedures other than test of controls are not sufficient. क्या कहना चाह रहा है? मतलब अगर TOC sufficient नहीं है तो हम substantive देते हैं, लेकिन इसका title तो ये है कि design and performance test of controls, design and perform TOC in the following situations.
Yeah. So here the point here is like, for example, you are doing attestation engagement to give the comfort on over the test of control for the related subject matter, right? So for example, I am a parent company. I have given an agreed upon procedure to my component company to test the control around the inventory observation. To test the control around the inventory existence assertion, right? In that case of scenario, if you are testing the procedure other than inventory observation, those procedures are not sufficient to give comfort to the test of controls around the observation or existence assertion. So in that case of scenario, you need to mandatorily need to test in addition to other procedure you are performing when you are supposed to give the comfort over the control. Right? Make sense? Or is it still confusing?
Still slightly confusing.
But in examination you will see those kind of tricky language. So you need to understand like context behind those kind of, you can say, lines or transactions. Yeah, Ayush, you're saying something?
Can you just explain one more time?
So here we are discussing test of control, right? For example, I am a parent company. Let's say I'm Amazon USA, and let's say you are an auditor for Amazon Japan. So for, let's say, Amazon Japan, from the overall group financial statement perspective is not material to me, but they have good amount of, let's say, cash balance, right? So I asked like Ayush and company CPA firm, who is my, let's say, component auditor, to perform agreed upon procedure for helping me test of control around the existence of cash, right? So which include, let's say, 4 procedures. One is like physical count of the cash, which management do and observe those cash count procedure. So let's say that is a testing of control. Second is the reconciliation of cash procedure, right? Third is the you can say payment transaction, 5 payment transaction and 5 receipt transaction. So let's say we agreed with you to perform these 3 procedures, right? And you need to give me a comfort on the over the controls around the existence of cash. So which one is the key controls here? Is management is doing monthly cash count and you need to observe that cash count, right? If you have performed like 5 testing of payment, 5 testing of receipt, right? And if you have done like cash reconciliation testing also, but you have not tested, you have not observed the cash count procedure. So those additional procedures you have performed will not give me comfort over the controls around the existence of cash. So for that, you mandatorily need to observe the cash count procedure, which management is doing. Then only you can give me a comfort over the controls around the existence of cash assertion.
Okay.
Make sense?
Yes, sir.
Right, everyone? Gurmehar, Kashish,
yes, sir.
Misha, Sanchit, Avneet. Okay, let's do some practice question. First question of the day. The most appropriate evidence would be given by which of the following procedure? I told you, like you will see like a lot of answer might be right answer, but you need to select the very best right answer. So this is an exact question for that. The most appropriate evidence would be given by which of the following procedure? Inquiry with the client, scanning of trial balance, recalculation of bad debt expense, comparison of beginning balance and ending balance.
Option C.
Third is correct. I'd
Why?
say
क्योंकि ये सारे फैक्टर से इन्वॉल्व कर देंगे कि इंक्वायरी भी होएगा सब कुछ कर करके कंक्लूजन में जाके हम रीकैलकुलेट
So at the end of the day, if you think about getting the evidence, it's talking about the quality of information, right? And inquiry would not sufficient. It's not is never sufficient alone. Scanning of trial balance is primarily inspecting the documents. You're just looking at it, but recalculation is doing this like like we are recalculating what the client has calculated and kind of trying to get the same number or a reasonableness test. So that is where we are we will be more comfortable whether the logic concept percentages numbers are accurate or not.
Yeah. Anyone else would like to add?
Sir, I have a doubt.
Mm-hmm.
What if one of the options is confirmation?
So then confirmation is more appropriate.
More appropriate.
Okay.
So third-party document, independent third-party document is the most reliable source. Second is where auditor himself is being involved in doing like re-performance recalculation. Third is all the other internal document, and fourth is inquiry. So that may be the sequence of the reliability of the respective procedures or respective, you can say, information that auditor received. So here most appropriate thing is the recalculation, because here auditor himself is being involved in doing the calculation and reaching out to the conclusion. Make sense, everyone? Rahul, Ranchita, Sanjay.
Yes, sir. Yes, sir.
Second question, what should the review accountant do if the review accountant is unable to gather sufficient relevant evidence to support the limited assurance conclusion? So here what you are doing, review, right? You are not doing audit, keep in mind. First one is change the scope of engagement to compilation regardless of the nature of evidence that was not able to obtain. Withdraw from the review engagement, issue a disclaimer of the review conclusion, issue a qualified review report due to scope limitation. What should the review accountant do if the review accountant is unable to gather the sufficient relevant evidence to support the limited assurance?
So second option is correct, because if there is any scope limitation, then withdrawal is the best option. Changing it to compilation, because anyways there's no reasonable reason to change from review to compilation. So withdrawal is the best option, I would say. Yeah.
How about others?
So I agree, but I just have a question. Like in the first point, it says change the scope of the engagement to compilation. Is it the auditor who would do that, or that's ideally a management thing to do?
Sorry, I didn't understand what you said.
Like I agree to what Gurmeer was saying, but my only question is that in point one, it says change the scope of engagement to a compilation, right? So usually this would be from management, right? Management would change the scope, not the auditor.
But do you accept that as an auditor, if management is not giving you information, so there might be a risk in your mind.
Exactly.
Like management is hiding something from you.
Exactly. In that case, I agree that the answer is 2. So that's scope limitation, and it has to be answer 2 that you should ideally withdraw. So I agree, but my only question that I had in my mind was, and again, it's not related to this, it was in general, that can the auditor change the scope of work, or it has to be from the management that, okay, now I don't want
from management. It has to be from management. Yeah.
Okay, exactly.
Auditor cannot change the scope.
Right. Okay, thank you.
Right.
Management will give a reasonable, I would say, the sufficient reason to change to it.
Yes.
For example, we discussed, if their lender is no more required to have a audited financial statement, so we can change it to compilation or attestation.
Yes,
so that is directed from management. Yeah.
Yes, absolutely true. Right. Rahul, Sanchit, Ranchita, Avneet, good. So wherever you have any doubt on the integrity or competency of the management, it's better to withdraw. Right. But if it is being relating to maybe one financial statement line item, you might have think of giving disclaimer or qualified. If it is more of persuasive in nature, then disclaimer or withdrawal is the better option. So last question, the most persuasive type of audit evidence is what? The client worksheet supporting the cost allocation, pre-number client purchase order, management representation letter, bank statement obtained from the client. Which one is more persuasive?
Fourth one, because coming from the third party.
Coming from a third party.
Yeah, Sanchit, Ranchita, Avneet, all agree to it? Coming
Yes,
from
sir,
third
yes, sir.
party is more reliable.
Yes,
Yeah.
sir.
Okay, so we are done with second topic of the day, which is journal audit procedure.